Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video, I wanted to spend some time discussing Amazon because obviously Amazon has been in focus since their last earnings report, and anytime you have daily squeezes like this, they tend to be good signals that we're looking for some higher prices to come through. As it works out, and I had the idea, but I also saw that John had tweeted sometime last week saying, "Oh yeah, come on Amazon, just can you hurry up and pin at 1500?" So in the back of my mind, it had kind of queued up that idea, and then you see these various squeezes forming not only on the daily, but then also as you come down into these intraday charts, which is just one more thing to confirm that maybe it is time to get this thing up and going. Also, as you think about psychological levels, I think that 1500 is one of the best because you're thinking from the biggest round numbers, right? So something like 1500, and then overhead I might think of 1750 and then 2000. So when I saw that Amazon was approaching this level, that psychological point just kind of cues you up for the potential of a trade into it. Now, butterflies in these situations can be a very good low-risk way of trying to participate in them. And when you get into the end of the day, it's important to note a couple different ways that you can manage these. Now also note that in this spot, the P&L open is not really accurate because what it's taking into account is this 1520 call that did expire completely worthless, but what it does not necessarily tell the story about, or what you have to come down here to notice, is that the trade was really the 1480, 1500, 1520 standard 1 by 2 by 1 butterfly. So when you execute a strategy like that and you see this grinding higher into the close, getting pretty much exactly where you want it to be, it can sometimes be a little tricky to get out of the entire butterfly because nobody really wants to trade the 1520 calls with you. Those are set to expire worthless, and sometimes the wide bid-ask or no activity at all can make it tough to get filled. So what you do in this case is just manage it as a ratio spread, coming in, buying back the two 1500s that we were short, and then selling the 1480, which allows you to get a little bit better fill in this. You can see this here through these filled orders. So you take in a $17.50 credit on that, and that's it's about as good as it gets when you're looking at the management of those flies. I will only manage them in that way on the day of expiration because otherwise, it just it kind of cuts it up a little bit too soon for expiration. But when you're right there on top of the day, you know that this is coming in to expire. That can be a better way of getting your fills, and of course you get to save the commissions on that extra leg as well. So I hope you guys find that helpful. If there's anything else you have questions on, please let me know or find us in the chat room. Have a good weekend, and we'll touch base on these ideas again as we get into next week.